Welcome to the On the Tape podcast. I'm your host, Danny Moses. Today, I welcome back my boys, Porter Collins and Vincent Daniel, for another edition of What Are We Doing? But this time, it has a bit more meaning. We're going to get into that. Welcome, boys.
Hello.
Good to be here.
Yeah, good to see you. All right, so yesterday we went live with our What Are We Doing? Contrarians at the Gate Substack newsletter, which is going to include a few things we're going to talk about here. And we're going to make, informational, entertaining content, so to speak, on a regular basis. Live video streams, management teams. We're going to have a Discord chat, a podcast ourselves called the Friday Night Dirty, which is my favorite phrase from the desk. But let's talk about the Substack a little bit. And Vinny, maybe I'll start with you. You wrote about it already. You can read about it on the Substack, but why we're doing this?
Well, the title of it, and thanks for having us on, by the way, Danny. The title of our inaugural was Solving for Fun. And truly meant for that is that I remember some of our best times were done together on the desks at either Front Point or Seawolf. And over time, over the last 6-7 years, Porter and I have been running our own capital at Seawolf 2.0. And we've always asked ourselves the question again and again and again, like should we open it up to outside investors? And the fact of the matter is that for the past few years, we were finding ourselves, because we used to be sector specialists in the financial services arena, and all of a sudden we were becoming generalists. We had no idea who we were going to be or what we were going to become. And we turned out that we were who we thought we were. And we are thematic, general value investors. But we also learned that based upon our process and style, it wasn't really conducive to open it up to a fund. But we missed the banter. We missed the camaraderie. And through the time, we actually started discovering in our process, a research process that involved Twitter, that involved playing on Discord chats, that involved hanging out with obscure seers, as I like to call it. And all of a sudden I said, well, why don't we start doing this together? Actually, I take that back. Danny actually turned around and said, hey, why don't we build a product of content of our daily lives or our blogs of what we're doing and make it into a value-added subscription service for willing subscribers. And I thought it was a great idea.
So, Porter, the 4 words, what are we doing, was what we would literally say to each other all the time on the trading desk. So that's why we're just converting this. And people that listen to this podcast, you guys have been on many times, know that. But talk about what it means to you and really the level of fun that Vinny's talking about that we're going to have doing it.
The markets are so hard, and it's always like, what are we doing? Why are we doing this? And so it was always a funny phrase for us. And, I think this is a natural evolution of where we were going. We thought hard about opening up a fund again. And, frankly, it's really hard. Right. And the stress of carrying positions overnight and, multi-million-dollar positions and the grind of it. And it took its toll on all of us. And, post-COVID, we moved away, we moved home, Vinny and I are much healthier for it, being able to, exercise daily, be with our families more often. And so, but we miss the camaraderie of being together, and we miss, the camaraderie of going to as many meetings as I used to and all that kind of stuff. And so this is sort of a bridge. And, we've found that we've gotten, as much as we've given out on Twitter and on this podcast, we've received a lot back. And so there's a lot of really smart individuals out there. And, a founding member of the Substack reached out to me, goes, I'm just an individual investor. I go, yeah, so am I. So all's great. And thank you. And, actually, we're really, touched by as many people signed up for this. And, we're going to make it fun for them. And, I know we'll be on this podcast occasionally, but I think our own podcast will get into more ideas, more specific stuff, and answer more questions and all that kind of stuff. So.
Yeah, well, it's great to be with you guys doing something together again. If you weren't going to raise outside money, then this was the next best thing. So look forward to the journey on this one. All right, so let's get into it here. Kind of macro in the markets right now. The biggest thing happening right now is the Federal Reserve. And I preface that by saying, what we saw in 2008 together and then the TARP and the TAUF and QE1, QE2, and then what we've seen, QE continuing in iterations of it over time. And when we were running Seawolf Capital 1.0, long short financial services, starting in literally January 2012, you realize how hard it was to, create alpha, so to speak, on the desk when the Fed was intervening. That being said, Fed's still a huge, important part of this economy and the global economy, so to speak. And now we are making it political. And, it's maintained its independence over the years. You can have your opinion on do certain Fed governors or head of the Fed do certain things at certain times to help people. I don't think so, but put that to the side for a second. Let's talk about what's happening right now. So for people out there that don't know the lay of the land, let me just say there's 12 voting members, on the FOMC. 7 are board of governors, and then you have 5 regional Fed presidents out of the 12 that rotate through. The New York Fed, John Williams, is the one that always stays. So you have 4 that rotate through. So it's dominated by these 7 Fed governors. Obviously, we know Powell's at the top of that, right? And so when you look at the makeup of it, if you want to get into politics, you've already seen what's happening. You had a Democratic one step down a few weeks ago. Steve Moran's going to get appointed. So as of right now, there's 6. And now, between Pulte going after Cook and then Trump following on for what they believe is mortgage fraud, they're trying to push her out and fire her. She filed a lawsuit as of this morning. I want to talk about actually get your guys' opinion. Forget that for a second. Kind of the Fed's role in what they've been doing over the last several years, and why, I want to get your opinion, why it's so important that they maintain their independence. And lastly, comment would be, if we don't think they're independent, one, and then the second part of that is if we don't trust the data that we're seeing, whether you think you trust it today or not in terms of inflation, what that means. I know there's a lot in there, but I needed to kind of set the stage. So, Vinny, you're ready to chat on this one?
Absolutely.
All right.
This ought to be a fun one here, Danny.
This might be.
You've opened up Pandora's box.
So first off, let's start with. I won't speak for Porter, but I speak to him a lot, so I think he agrees with me. Let's start with the premise that we start with. The Fed has never been, and never will be independent. We'll start with that, right? We just have this fake persona that it is independent to make all of us on Wall Street feel happy. So the only introduction that is new is that you have a president that is significantly more explicit in what he wants than we've ever had in our careers.
I need to ask you a question on the independence. What you're saying is cater to Wall Street more than anything else. It's not a political party. It's whatever funds Wall Street and
Wall Street's party is green, in my opinion, right? And whenever they're in trouble, at least in our careers, the Fed's there to bail them out, no matter what. That's what happens. Yeah. That is the premise, and quite frankly, that has turned Porter and myself to have probably a very subjective, unquestionable desire to own gold.
I was going to get to that,
but to say that, so once you start with that premise that they're not independent, everything that you see kind of makes sense. And when you layer in who's running this country right now, then it makes complete sense. And again, another thing Porter and I say, I apologize, Porter, is we try to keep our political views, when we're managing our own capital, we try to keep our political views off the table, because all it does is get us in trouble. All it does is create negative alpha. So our perspective is, when I start with that they're not independent, everything I see as a market participant, I'm like, yeah, sure. Of course he's trying to fire her. He needs power and control of the Fed to do exactly what he wants. And it's very consistent with everything he's done in this administration.
So numbers are coming in. They're not messing with the numbers. You can see their interpretation of the numbers, of what they're seeing for inflation, whether they're seeing the jobs number, that they don't look at them correctly. Powell was obviously late to how much inflation was going to be in the system years ago, but the numbers. So they have the numbers deal. You can look at yourself and decide whether the Fed should be cutting rates or not, or what the neutral rate should be, and all those things. So I understand what you're saying, that it's not independent. And I stressed that since 2008. Every time there's been a crisis, they come to the rescue. All right, Porter.
Well, we were speaking to our friend Mike Corsini last night on it, and I agree with him, and I sort of more like him in terms of Old Testament style. But in terms of, he said that the system only really worked in the 1980s Fed style, where there was no transparency. They were more focused on liquidity in the markets. And then when Greenspan came in and did all these press conferences and jawbone markets and did all this type of stuff. That was sort of the beginning of the end of that era. And, Vinny and I like to debate, Greenspan versus Bernanke, who the worst ever Fed president was. It's kind of because of that. And since then, the Fed has not been independent. And, they think they can move markets, and they think they can, draw out, economic cycles and do stuff that's unnatural. And so, I have no love for the Fed. I think it's always been political. I think that, so am I surprised about the Lisa Cook stuff? Absolutely not. The Democrats are hunting Trump for 4 years. He's a vengeful guy. He went right. He's like, F this, I'm going after you. And so he looked for any cracks in the story. And, if she didn't, I don't think she denied that she did this. And so I don't know, she's gone.
She's not gone, but let me just say, the Fed became...
If it was you and me, we'd be gone too.
Well, the Fed became important in 2008. That was the first time it became crucial in the sense of it holds the cards. You went from $200 billion in debt on the balance sheet to $9 trillion right over the period of, decade or whatever it was, and they're trying to wean off. So politics aside for a second, because it's been multiple administrations, both parties the Fed has existed in, and it just exists, but it is what it is. You have to play the game, you have to play the cards that you're dealt here. So the cards we are dealt are the following, right? QE could come back into play. And again, all roads lead to gold and Bitcoin for those Bitcoin people that are out. All roads lead to gold here, because I'm trying to figure out, it's a major input part for banks and yield curves and all these things. It's a financialized economy. It's never been more so, Vinny, the amount of debt in the system. And all they did was take all the liabilities effectively out of the system, out of the privates, and put it into the public system, meaning, the Federal Reserve. So whether we like it or not, we're going to have to deal with this. And it's an ongoing issue. It affects the dollar, right? It affects policy. It affects everything. So that's what I'm dealing. I get what, Porter, I get the whole, I'm going to get you back and all this stuff. But that was the one part of the Fed where I was hopeful we wouldn't have to deal with that. And now my concern would be, listen, people that think the rates are short-term rates getting cut sooner, there's nothing wrong with going 25 basis points. It's not going to damage here one way or another. But to think we can go to 1% or 1.5%, to think that's not going to have an impact, Vinny, on the dollar and on longer term, longer duration interest rates, like that's the part that I just think people are thinking about.
It's a complicated discussion, and I think that when you say all roads lead to gold, and I kind of agree with that. We have a large percentage of our portfolio in gold. It's more about inflation. Right. And listen, inflation never touched 2%. And, he reworded in some of the Jackson Hole stuff of the Inflation Balancing Act that he was talking about. And, we never touched 2%. We're going back up now. And we all know that they're underreporting inflation. Right. And so, and we've been saying this for a long time. Inflation is much higher than you think it is.
So why is that political then? So he should be cutting rates? You're not.
Well, let's get to the point where he needs to cut rates, right? Right. If I think about everything he's done so far and everything he's put in place in terms of the big beautiful bill, whether the tariffs and the like, he desperately needs lower rates to make this work.
Vincent and Trump, the two of them.
The Trump administration. Let's just call it as it is. And so as a result, it really doesn't matter. When you you desperately need lower rates, because from a fiscal perspective, we're crowding out other investments given how high the interest expense is. And we have increased the amount of Treasury funding that's coming from the short end, from bills and the like. So when you do that, you need to lower rates by hook or crook. And quite frankly, doesn't really matter what inflation's going to be, right? Take your conferences and your interviews that you have with Luke Roman, and I subscribe to what he says, like in so many ways. They need to lower it, and they will they fabricate what inflation is? Well, they've been doing it for a while. They will probably continue. People disagree that you need to lower rates now. Well, fire the people who are in the way. I'm not saying I love it as an American. I'm just, as a market participant, I'm just looking at what the tea leaves. And what we are probably going to get, more likely than not, a higher probability, and we saw it in Jackson Hole, is we're going to get a rate cutting cycle. How deep it is, I don't know. When inflation rears its ugly head, what do? I don't know. That's an interesting question. But for now, if you ask me to flip a coin of whether we're going to get lower short-term rates or higher short-term rates, it's clearly going to be lower short-term rates.
Well, that's obvious. That's not the...
But then what we say to ourselves as market participants is, what do you do about that?
Correct.
Right?
Yeah.
What are we doing? What do you do about that? I can't make up the rules. And I will say this. Hold on. I will say, I could look at certain parts of the economy that strongly suggest that they should lower rates. Right? So if I just turn the lens to our old world, right, which is loans, housing, commercial real estate, consumer discretionary, everything outside the Mag 7 and AI and the like, this country is probably in a slowdown/recession. It just is. And if Trump decides...
It's not a disaster. It's
no.
That's why I don't disagree with that at all.
So as a result, I can understand why they want to lower rates. Now, sadly, the market side of it, what I call the securities world, right, derivatives world, crap's booming, right? So Powell's got a conundrum, but he's choosing, probably being bullied, but he's choosing to be on the more dovish side. And so I think we're going to get a mini rate cutting cycle. And the question is,
one of our annual reviews had the picture of the title was "No Easy Way Out." It's the same thing. We're in this catch-22.
Yeah, that was Rocky IV.
Rocky IV.
I would say this, Porter, to your comment, and we can move on from this, which is inflation is going to run hot.
We can talk about this all day.
But whether inflation runs hot and we don't see it because we now are going to obviously kicked out the head of the BLS. That's a whole other thing. We're controlling the narrative. Don't tell me inflation's 2% when it really feels like 5%. So eventually the consumer is going to get hit one way or another. So pick your poison. The problem with all this stuff is a lot of government agencies and policies are predicated on what that number is. What is your Social Security increase each year? It's based upon inflation. If it's not keeping up. So longer run, you're right, we'll deal with it. Shorter run, I understand the game. I get the whole thing. It's just, to me, it's a little, I wouldn't say disheartening, but uncomfortable now to not know what numbers really. So as long as it's apples to apples of bad numbers, I can deal with it. When you go to apples to oranges, I think it becomes a little bit hard. That's all I got to say.
All of this should have been scrapped years ago with the BLS, right? The numbers weren't correct, right? And they were they were, this birth death adjustment. And so if you go back to the catch-22 of markets and inflation that's running hotter, but we all know the employment direction is not great, right? It's slowing down, and I think B of A talked about it on one of their conference calls, and they said that we've grown loans X% from the last 15 years, and we've grown deposits 3X, and we've done this with 20% less workforce. And if we're in the age of AI and we're talking about, they're creating AI to crush jobs and increase productivity, we're going to go to this world where corporate profits are going to go up and employment's going to go, we're going to lose jobs, right? And so, again, I think that there's no easy way out here. And I think that, Powell has both sides of his mandate. I think actually he's done an okay job as a Fed chair. A couple of screw ups in 2018, I think that was, but he's in a real catch-22 of trying to, and he's been good, I think, not to cut rates too early because, I think he probably got political last time? Yes, in cutting rates before the election, but we can ignore that for now.
Listen, if people are trading the markets based on a job number that comes out, right, or an inflation print, and you get but that tells you how important it has been to the rate cycle and why it is so big. All right. So one thing we used to do on the desk on Seawolf 2.0, and maybe even at Front Point, I don't remember, is when the unemployment numbers would come out and the jobs number, we would bet $1 each on the desk, closest to the pin. Well, now you can do it actually in the form of event contracts. And it was Porter who last Friday went on to Kalshi and said, would Powell use the phrase risks are balanced? And it was 50-50, right?
50-50.
50-50, and
I
you
want to
hit
take a little bit of credit for
Okay.
at least
Yeah, but-
suggesting
yeah.
that that's what he should
No,
go.
good on you. So it
We
wouldn't
did it
matter,
together, but
right?
yeah, we bet
So
$100.
I want to talk about the sports gambling.
Sorry, we didn't bet $100.
You accrued. You bet. You won $50. You put 100 up. You win.
No,
I get it.
We can't use the word. You can't use the word bet.
Whatever.
Right?
You took a side of an event.
Thank you.
Right, and you would have lost. It's a wager, but whatever. So you got sports gambling companies, and I've talked about this on this podcast. I talked about it on CNBC. You guys know that I've been long this sector for my whole life, but really the last 5 years, since the state Supreme Court, or that's been 7 years since they overturned, and you could do state by state legalization of gambling and all this stuff. So all of a sudden, just to rehash what everybody that's not following the sector and what's happening in the event contract world, you had Polymarket and Kalshi pre-election, presidential election last year, accepting wagers, on the event and what the outcome would be. And all the money was coming in that Trump was going to win. And Trump and his family liked it, that this thing exists, because it was the one poll where money spoke as opposed to asking people in, various cities and towns. And it turned out to be correct. So once Trump came in, what happened? Donald Trump Jr. became an advisor to Kalshi in January of this year, right? You have the possible head of the CFTC who's nominated to be head, who's on the board at Kalshi. So we know it's not going away for the next at least 3.5 years from now, right? So you have these event contracts. Now, DraftKings and FanDuel spent billions of dollars acquiring customers, getting through regulatory stuff, to get in dozens and dozens of states. What are the cream of the crop states they can't get into yet? Texas and California don't have online gambling yet, and the state of Florida only allows Seminole Indians to run it, which is Hard Rock, and Hard Rock manages it for them. So you have 3 huge states, basically, where no one else can get in. So where this all leads is the following. These event contracts, which are listed on Robinhood, you can directly on Kalshi, Polymarket, whatever you want, are moving into the sports arena rather quickly. As a matter of fact, you're seeing partnerships now that are being formed that on Robinhood, you can pick an event, whatever. And here's the problem. These online gambling companies, DraftKings and FanDuel, make all their money on 2 things. Parlays, which are horrible odds for you and me, and in-game live wagering, where people chase their bets or cash out or try to get out. That is where I believe that, granted, small percentage right now of market share is going to be taken from Robinhood being able to provide this. And guess what? In Texas and in California, and Porter's in Texas, so he can do this where DraftKings and FanDuel can't get. So long-winded just description of the current landscape of what's going on. There's cease and desist from various states where Robinhood is not going to offer these because their brokerage license is too important. It might be Massachusetts, or Illinois or something like that. So this is an ongoing battle, but I really think it's critical to understand what's happening. And I want to get you guys' thoughts on it, because I feel like these stocks are reaching an inflection point. DraftKings and FanDuel, I would never short them because the macro is so strong. And I'm still on Genius Sports, which provides all this data. So sorry to go on so long, but I just wanted to set the table on one of the vices that we're going to talk about today and get your guys' thoughts on this industry.
We've been talking about this in the context of Las Vegas, right? Do people need to go to Las Vegas? Las Vegas used to be cheap, not cheap anymore. Does Las Vegas turn into Atlantic City now that, you can go on, DraftKings and FanDuel, you can go on Kalshi? The gambling is a big draw for Vegas. There's obviously a lot of other stuff going on, but everything's proliferated. Just like the online world changes the way offline retail works, right? And so when everything's brought online, the whole thing changes. And I think longer term, it's a big deal for Las Vegas. If I go on Kalshi, you can make wagers. I think that's what it's called, on pretty much anything, right? It's crazy what you can do. I don't personally love the culture of what that brings, but no one cares what I think, right? Again, no one cares what any of us think, but that is what it is. And does it help? I think our process of investing, looking where the odds are of the election, of rate cuts. Yes, I think it's very helpful.
I would say, Danny, you know more about this industry than we'll ever dream or imagine. So I'll go with your opinions on this because I think they're good. The one thing I would just add is, in general, when you increase the number of competitors that are out there, you typically want to avoid the sector. So, and I could tell you just for my personal stake, I have an account on Robinhood. And I was very happy when they actually started providing prediction markets because I'm not a big gambler. I don't do it. However,
will the Jets have a losing season?
Correct.
Yes.
Yes. Will the Mets not make the World Series? Yes.
Right.
And what I also like betting on is in golf, the big four, and I get to choose on odds, and that's all I really want to do. And so as a result, I don't have to go and open up a FanDuel account or a DraftKings account, nor am I going to. So to me, and you probably know more about the arbitraging of the various odds between the two. That's more your area of expertise. I'm just trying to, somehow get Adberg to win a major so I can get him at 4-1. But I look at the competition and I just generally conclude I put DraftKings and the FanDuel in the do not touch pile, right, as a result of it.
Yeah,
now,
listen, the states, there's 40% state tax in Illinois, 51% in New York, and they balance and go all through this. And all of a sudden, these event contracts come in that are regulated not at the state level, at the federal level. The CFTC regulates them. So it's a regulatory arbitrage that's going on, and I think it's worth watching. And, you mentioned the point before. I'll give this example, and then we can move on to another vice, obviously, Porter, we're going to talk about here, which is the in-game live wagering on a DraftKings or a FanDuel in the middle of a game where it's, football team's up 14 points, and you got to lay 4-1 if you want to keep betting on the favorite to win, and then you're only getting like 2.5-1 on the underdog. So effectively, minus 400 plus 250. If you go on to Kalshi, what will be able to go on Robinhood, it's going to be right in the middle. It'll be 325 basically either side, and they take 1% on each side, not this 30%. So anyway, I think people should watch it, and it's definitely a big change in the industry. All right, on to another vice, which has been in the news, really because of Trump bringing it back up, is cannabis and the regulatory changes of a rescheduling or a descheduling or a legalization. I'll give you my opinion after I want to hear your guys' opinion on it. It currently is a Schedule 1 drug. The big issue is, can you downgrade it to a Schedule 3? If you downgrade it to a Schedule 3, you can open up banking and listings on the exchanges. So I know the one name you guys obviously have in the space, you're very vocal on it on Twitter, is Glasshouse, which is how you guys have played this. But Porter, give me your thoughts on the macro, kind of on the sector, and what you think is going to happen.
We, of course, fell into this company, Glasshouse, and Vin and I don't partake in the use of cannabis. So, this is maybe a novice view, but, we just found, we've owned Philip Morris for, quite some time. And so it's sort of similar company. And, our view was that they're going to be able to ramp up volume, produce lots of profits, and it's a great stock. And to be fair to Glasshouse, it's the only stock in the MSOS, the cannabis ETF, that's up over the past 4 years. Everything else is down, and down pretty badly. So I would say it's been a fine investment for us. We've made maybe a couple shekels, not too much, but we think that they're hitting the inflection point in terms of utilization of all their glass houses, their greenhouses. And again, we didn't underwrite it for this, but potentially, they're changing the rescheduling the drugs. And so, it sounds like all of this is coming to a head in the next week or so. And from what Trump has said, I think he said we'll say something in the next 2 weeks. There's meetings in Washington going in the next 2 weeks. And so, I kind of put my odds at, there's a 25% chance they rug us.
Welcome to the cannabis industry, by the way. Yeah.
And Vinny and Porter, go to the bar, start drinking early, and figure out what to do with this stock. But again, we didn't underwrite for that anyway, and so we'll eventually be fine. And then, sort of equal odds, they either, with the rest of the odds, is either deschedule it in terms of no scheduling at all, or reschedule it to something that looks like cough medicine or whatever. And, if that happens, it's my belief that these stocks go up and up a lot. And, the only one that's publicly traded is the ETF on the New York Stock Exchange. That's MSOS. I believe that's the case.
Well,
and there's a couple other ETFs.
Tilray,
but,
you can.
We own the pink sheet Glasshouse one. So that we think if they reschedule or deschedule, that those stocks will again trade on the New York Stock Exchange or the NASDAQ, and everything opens up.
our biggest risk in any of our names, right, generally speaking, is that they turn into a value trap, right? Like, so, so the biggest issue, right? No, that's Cobra.
Okay.
It's when you get fired, you get Cobra.
Oh, yeah.
So,
yeah.
But so to me, we underwrote that, 3 years from now, Glass House will be $5 or $6 per share if nothing happens. The good thing, which doesn't matter, is that last quarter's results, they, without any help, at low utilization, and I asked the CFO, I go, is there anything fugazi in these numbers or was this real? And they posted 30% EBITDA margins and an ROA north of 10%. And this is without anything, without the catalyst. We're well aware
which is the same as roughly as Philip Morris.
Correct. So we're well aware of the fact that all those great numbers don't mean shit unless we get federal legislation, and that we know. However, if we do, right, there is massive upside to this name because they are the low-cost provider in the legalized and probably illicit world of cannabis. And heaven forbid they get, and I know you don't agree with it, Danny, and I'd love to hear your thoughts on this, interstate commerce, or even heaven forbid that you have the ability to export it overseas, then this stock has massive, massive upside. But that's what we shall see. And we all know until we get that to happen, until Trump speaks on this, we're sitting on a value trap.
It goes to the process, Danny, and how we look at a stock, right? We look at a stock, say, how do we find a company that if we're wrong, we don't lose much money? And if we're right, we can make, I'll say 3 to 10 times our money. That's pretty freaking good, right? And it's not open door fugazi, like they got to rechange the business model and make all these wild assumptions and get lots of pumpers into the stock and whatever. This is like it's actually math, right? So that's how we underwrite stocks. And if we put together a portfolio of some of these asymmetric names where, listen, we have plenty of little value traps in our portfolio that might not go anywhere, and we'll eventually sell it and whatever. But if we can put together that some of these things where you get 3 to 4 of these work a year, you're going to have a great year. And I'm not chasing the S&P, and I don't care what the markets do, and I don't care what rates do, and I don't care what Bitcoin does, and so that's how we kind of think about the world, and just underwrite for a couple of these things that if they work really well.
As it relates to cannabis, the fact that Glass House has been able to manage and run their business, given all the regulatory handcuffs that have been going on, says something to your point, and it will free up. I think it'll be a state-by-state thing. I'm just counting on hopefully just Schedule 3. And I got to tell you, that's enough to open up private equity, institutional money. And don't think for a second the U.S. exchanges won't have any excuse to uplist these things or bring these things to U.S. exchanges. And that, in turn, obviously brings in all types of liquidity. And the drug companies and the alcohol companies are going to buy all these things up left and right. So, I think something will happen eventually. We'll see. But kudos to you guys for kind of doing the bottom-up work on a company and then the extra.
Anyway, Vinny and I always prepare for the worst, and we're probably getting ready to get rugged.
Right.
So
exactly. But, All right. Another non-rug pull sector is uranium. You guys have been on it. I had Larry McDonald on here a couple months ago, and he's been obviously on that trade. But specifically, the reasoning would be if you want to value the Mag 7 and this AI trade at these trillions and trillions of dollars, then you need to do the math on the other side to make these companies viable to actually be able to run the software, do this stuff. Then you need energy. And rarely do you find a bipartisan policy supporting one thing, which is nuclear now has crossed over, right, onto kind of it's clean, it's safer than it's ever been, and here we go. The problem is it's the good part for investing in it's a 5, 10, 20-year kind of thing. But talk to me about uranium, nuclear trade in general, and why this feels like, it does to me, like it's time for this kind of group to make a move.
We've been on this investment for about 4 or 5 years. This is one of the first things we put into the Seawolf portfolio. And I remember the initial thesis was a function of the fact that China had in the process of or was developing, I think it was something like 50 nuclear sites. And you started getting over the excess supply of uranium that came from Fukushima, that the excess supply story was turning into an inefficient supply story as all of these nuclear plants were coming back on and no one was producing uranium at $15 or $30.
As Cuppy likes to call it, inflection investing, right?
Correct.
You inflect in the dynamics of what's going on.
Since then, and the reason why we still love it is because in and of itself, forget about AI, the supply-demand dynamics over the next 5-10 years for uranium is extremely favorable, right? Then you start adding the AI dynamic, which is the need for or the desire for clean energy, the need for stable 24/7 energy. And nuclear really is one of the only ones, that and natty gas, that really fit the bill. Then you add on Trump's initiatives that he views uranium, and understandably so, nuclear, as a matter of national security, that he wants this to be developed and processed in the United States. So like the trifecta for us was like, wow, this is a powerful, long-term, cyclical, perhaps secular investment that we could just sink our teeth in and quote unquote buy on dips. It went through its own bear market. I would say over the last 15 to 18 months, it seems like it's emerging out of that bear market. There's a major conference going on in London in 2 weeks, I believe.
Yeah, September 3rd.
Where it is believed that we're going to have, finally, utilities are going to have to step up to the plate and sign long-term contracts at reasonably higher prices than where they have been, because they've been reluctant to do so. And in addition to that, we've become a bit of zealots on that. During the summer, Sprott and their trust fund raised, I believe it was $250 million to take $250 million of uranium off the markets, which further probably improved the supply-demand dynamics. So all of the above is the reason why we've been constructive on the group for quite some time.
And I'll say something unorthodox is that, I listened to Steve Eisman's podcast this week, and he had Steve Tusa on from JP Morgan Industrials Research, and did a nice job talking about all the upcoming power demands, and he goes through the numbers, and it's pretty good podcast. But that's uranium, and one place where we haven't yet done anything, but we're looking at natural gas, and I know our podcast is going to be Contrarians at the Gate. It's gone from $5 per MMBTU to $2.70, and they're going to need a lot of natural gas. I think they're going to put a lot of turbines on site at these data centers. We can get into whether we need all these data centers. That's a different issue. But that's something where these stocks are down. Price of natural gas is retreated. Maybe that's a point to look for inflection. And so again, go back to the process of what we do. I'm not chasing NVIDIA, for the earnings print, or the Palantir earnings print to see, whether they beat by 5% and the stock gaps up $10. We actually joked around when we bought one share of Palantir in front of earnings to say if we can call the top of the market. We didn't. We sold our one share of Palantir at $4. But trying to look where other people aren't looking, and I think that I think good examples that Vinny and I have come up with recently is we were together in January. We pitched China, and the Baba and all these K-Web had huge moves, and they all they kind of half retraced them. And if you look at trying to be put my bullish hat on here, is that if you look at post Liberation Day and what were the best performing markets, they've almost all been international markets. And I think that's partially because the dollar is down a lot, and it's a big tailwind for a lot of these, emerging markets and or overseas markets. And, I know Japan took out the 1989 high. China's still, I think, definitely below its all-time high. And I think the K-Web is 60% below I think that's their tech index is 60% below the all-time highs. And so, there's other stuff to do. And maybe just maybe, no one's talking about it because everyone's talking about Mag 7 and Palantir. You can get other parts of the economy working, right? Maybe the rate cuts and the global rate cuts are coming because Brazil's got to cut rates, and so there's a bull market somewhere. We're always trying to look for whatever that market is, and I know the three of us love to be bearish, and bear porn sells really well, but we've found over the years it's much easier to be long markets than it is.
Listen, when you find a long that is contrarian value, that's the most exciting thing you can find, because we like to short things because everybody owns it and everybody knows the story and you feel like the story's out there, which is why you want to short it. The opposite is that you find something that no one has. Is it true that on uranium, it's Kazakhstan, Canada, and Australia are the three largest markets for uranium?
Yeah.
Is that correct?
They're basically the only ones that do it.
Yes.
Yeah. So that's a whole nother. I mean, the rare earths come from China. We're going to need uranium. So it'll be interesting seeing how that plays out. All right. Last topic I want to get to is kind of government taking stakes in U.S. companies. We just happened with Intel. Listen, we lived through a ton of crises together where U.S. took stakes in banks, right? We obviously saw that happen. We've seen stakes in airlines. Feels like all the time when there's a crisis. Obviously from time to time, and they should just go ahead and nationalize those things. But anyway, so we see this from time to time, but now it looks like it's stepping even a little bit further. And I'm just wondering what your guys' opinion is. I'm not saying you're involved in any of these companies at all, but it's Intel now. Is it Lockheed Martin tomorrow? And what that does to kind of capitalism and free markets, and how you think about it.
Again, I'm going to start with the premise. I don't think we've had real capitalism for quite some time. And when you believe that you've had, I don't know what you want to call it, socialism for the rich, capitalism for the poor, crony capitalism, whatever you want to call it, right? My perspective is once you start with the premise that we haven't had real capitalism, anything that you see that we're seeing today kind of makes sense to me. It might be a little bit exaggerated. It might be new or novel. And I agree that taking over stakes of companies that are not in distress are novel. I can't say that I like it. But as Porter tells me every goddamn day, no one cares what you think, Vinny. And I've come to learn that as a result of that, I should just act on what I'm seeing and not and forget about what I think, what I care about, and the like. So to me, am I surprised? No, not at all. It just fits the billing of what a Trump administration, what he said he was going to do and what he's doing. We shall see how far we take it.
All right. That's Ayn Rand's viewpoint. What do you got, Porter?
Again, these aren't free markets, right? Look at our old sector, the financial sector. They're massively subsidized, right? The FDIC, I know they pay for it, but like it's the mentality that we'll get bailed out no matter what happens. The defense sector is obviously massively subsidized. Our favorite Elon Musk, there's no more subsidized person in the world, right? And so what did he, maybe we got a few shekels out of Elon and his loan payments, but maybe there was an opportunity to take equity stakes. The government did a pretty good job with AIG. They made a lot of money on that at the bottom. So, I'm sort of torn. Do I want them taking more stakes? No. But, we all know in bear markets, like no one comes, right? Everyone wants to buy stocks now, but when the bear market comes, no one wants to touch it, right? No one wants to touch Intel. It's a horrible looking stock, right? And, at the bottom, no one wanted to touch AIG. No one wanted to touch the banks. And so that's where the safety, or whatever the you want to call it, the government comes in and said, okay, we can do it. If it's not, the government, it's Warren Buffett, but he's sadly on his last legs. And so I think there's a time and place for it.
I think, listen, the time and place is during crisis, the economy needs to function. You have to have faith in the system. This isn't, I get it. There's crises going on all the time in various industries and pockets. I'm just saying if it becomes the norm versus driven by some type of crisis, if you're running Northrop Grumman or General Dynamics and Lockheed Martin, all of a sudden the U.S. government owns 10% of it, and you're bidding for contracts, you got to say to yourself, what are we doing? Because they're not going to have it. I'm just saying, like, you're meddling in the free market. That's all. That's the point.
What about the rare earth situation? Like, we obviously need rare earth situation. The need rare earths. China's basically controlled the entire market, and it's hard for a U.S. company to invest in what's going on because there's no capital, and it's of strategic national importance that we have this stuff. So therefore, they put money in. I kind of like that. That's just the way it was maybe in their eyes it was a crisis. Right? They're not going into NVIDIA. They're going into rare earths, which no one likes mining, right?
I guess philosophically speaking, I would just leave it with this: is that we never got kind of the clearing of the housing market, right? Because the intervention, right? So what we did, we subsidized, we put it. Now where is it? It's on the Fed balance sheet. Just circle back to our opening conversation is on that. So at some point, it all evens out, whether the taxpayer pays for it, whatever, shareholders pay for whatever it might be. It's just, I like free markets and I like things. If Intel can't succeed and it doesn't, okay, well, they have the wrong product. They're run poorly. Bye. They're not important. I understand. Oh yeah, they have a national security aspect to it. Okay, I get it. But I'm just saying, I think we're overstepping here a little bit. That's all.
Maybe it's just me that I have PTSD of all the overstepping that we've seen throughout our career, right? Like some of it's worse than others. This might be worse than others. I don't know. But how many times have we been at...
Nothing was worse than Fannie and Freddie, by the way. Right. We've seen the worst of it.
I mean, I don't know how many times we have been close and we use the proverbial, we're the Wile E. Coyote and the Roadrunner somehow gets away.
Meep.
So, meep. So, yeah. But I do have a side editorial for everyone, right? And I'm probably the most down the middle politically you could possibly get. I voted for both sides. I voted for Francisco Lindor, the last presidential election. Yeah. So I think I'm qualified to say this. And I love political strategy, right? And I love to make fun of political extremes. So I have a piece of advice for all of you, and you know who you are, that suffer from Trump derangement syndrome, right? Basically, whatever he says, whatever comes out of his mouth, you hate immediately. If he said the sky was blue, you'd be pissed off that he did so. And again, I get it. I don't love Trump. We used to have this thing on Seawolf, on the desk of Seawolf, and we used to say, when bears used to come in, and we used to say, you're not bearish enough, right? So for my message for all you TDSers out there is, you don't hate him enough, right? Take advantage of it, right? You know what he's going to do all the time. And so what I think of most of the time, and yes, there's some wild cards here and there, and clearly he'll go off path, but he is hell-bent on having the people believe that he's going to be the greatest president in the United States. And I know that just irks people, but and maybe it should, maybe it shouldn't, I don't care. But my view for them is take advantage of it. And someone would say, well, Vinny, what he's doing is going to destroy the fabric of this country. You might be right. However, for the next 2 years or so, he's probably not going to let it happen on his watch. And quite frankly, whoever takes over after Trump, whether it's a Democrat or even J.D. Vance or whoever Republican, if it falls, he's basically going to say, it didn't fall under my watch and everything was great. And the minute I left, everything sucked, right? So what Porter and I are trying to do as market participants is take advantage of what seems to be a president that is an open book in terms of what he's going to do. And I would suggest for all the TDSers to do that the same, at least financially. That would be my side editorial for the TDSers.
And the other thing is that I would try much harder to take all political viewpoints out of your investing framework. You have to think objectively. The market doesn't care whether you voted for Trump or Kamala. Doesn't care. So, especially everyone listening to this podcast, no one who's listening to this podcast, no one cares what their political views are. The market doesn't care. They're not going to have a say. And so the quicker you get all of that political crap out of your brain and invest what's in front of you. Because if you carry any bias on what you believe, you're going to get killed.
Well, I wouldn't say it's bias as much as you have to know what they're saying, because all of a sudden you own Restoration Hardware on Friday night, they're talking about, tariff on furniture coming in, and whether that's good for North Carolina and South Carolina, that industry, fine, but you say ignore it, but you really can't. So I understand what you're saying.
Ignore it.
No, but I understand what you're saying. I'm just saying it's unsettling to not know the rules of engagement. And you're saying follow where you think it's going to go. I'm saying it's a little bit unpredictable. It just makes the investment process that much more difficult, and/or requires a higher risk premium in everything that you're doing. So whether that means take down your book,
or right, I was going to say, or avoid certain things where there's a question. Right? Obviously, tariffs are a bugaboo for him. It's a weapon of his to get everyone in order of what he wants to do. And I apologize for speaking about Trump all the time on this one, but I think he's the straw that stirs the drink. I say it all
but
the
you're
time.
not wrong. It is what it is.
So as a result, anything that you think is against him in any way, shape, or form, it's probably not wise to be long that name, right?
For example, for our cannabis investment, he's going to come down like Moses and present.
Well, you think he is, but you just described a situation where you're playing it, but you could get rug pulled. But rug pulled.
We can.
I got you.
And I'm
you're well aware of it.
Open on it.
You got it.
Same thing with Fannie and Freddie.
Yep.
Here's what I decree.
Well, guys. By the way, that's probably the next time you guys come on. It'll be Fannie and Freddie. And for people who don't know, Vincent Daniel is probably not a person with more experience or knowledge about those two companies in the world. Sorry, Vinny, to put you on the spot. So stay tuned on that.
Experience, not knowledge. But
experience, whatever. Scar tissue, yes. I would say. But guys, really appreciate you guys coming on. I know we're going to be together in Las Vegas, of all places, talk about gambling and everything at the Robinhood Conference, I think September 9th and 10th. So we'll be on various panels out there with Dan Nathan as well. So it should be a lot of fun. So guys, thanks for coming on the tape.
Thank you.
Thank you, Danny.